The big sell-off at the start of the week was unsettling to some, but not Alan Knuckman, the chief market strategist at Paradigm. Alan, you have years of experience as a trader. What can you share with us? And was Monday a stock market crash?
Hello, Angie. I've been trading for nearly 35 years now, so I've seen it all. And let me tell you, Monday is not the C word. The C word it is a crowded market. It's a crowded market in stocks. It was a crowded market in interest rates. It was a crowded market in currencies. Everybody was on one side of the trade, and it was an unwind. It absolutely was not a crash. 2.5% in the S&P is not a crash. It used to be an average trading day.
Explain more what you mean by calling the stock market sell-off an unwinding.
All right, so let's talk about the unwinding. So a lot of people had unrealized profits, which fed on itself, and people wanted to exit and take their profits when it hit stop losses down below. Now, speaking of stop losses, we were stopped out of a number of positions. It's good money management. Nobody likes being stopped out, but guess what? It's a lot better to be stopped out than not to be stopped out. You can regroup and you can salvage some funds so that you can trade for next week, you can trade for next month, and you can trade for next year.
What's your new trade?
All right, our trade trigger today is gold. Barrick Gold, G-O-L-D, trade around 1725. Interesting here that everything got unwound, including the metals markets. But that was temporary because the big news out of Monday was the dollar decline. The dollar down, that helps commodities. So gold, after this sorts itself out, should benefit from this weaker dollar. We have this gold stock, GOLD, down 11% off its high for the year, whereas gold itself, the metal, is only off 3%. So you're seeing a great risk-reward setup.
What's happening in the gold chart? We have seen some record highs in gold futures this year.
Okay, again, dollar down. So I see bullish divergence back here in the spring where it made new lows. We've got a double bottom down at 14 in this stock. We've been between 16 and 19 now since April. That was a breakout area. So 16 is a very important level of support, and we're a bit above that. We held that on our last pullback. So a breakout of this range that targets 22 on the upside and some new highs.
What is your play to profit?
The way to play a GOLD option, a November option, gives you 3 months of time. A November 15 call trading for about 275.3. And because we're at 1725, it's 2.25 in the money. So the expiration break even on this option is about 75 cents up above. So you're able to be long from a discounted level. And if we get to that 22 level, it doesn't actually have to get to 22, it has to get to 21. If we get to 21, this option gains 100%.
Now onto your trading day takeaways.
Trading takeaways for this week. Now again, there's still some more swings to happen. I'm not saying it's straight up from here, but I found some six interesting things where the 6 is an important number. Let's remember, number one, the S&P low in 2008, and we're nothing like 2008. The S&P low was 666. Number two, the VIX. That VIX explosion got whacked right back down. It's now 66% off the Monday top. And number three, S&P. The S&P is 6%. Let me say that again. 6% off the all-time forever high mid-June. And so 54.20 is the midpoint of that high to this recent swing low. That'll act as a magnet. If we get back above that magnet, then you should see a full V recovery to the all-time forever top.
And up the stock market could go. Thank you, Alan.
Thank you.
Go to businessfirstam.com for where to see our show on TV.